Okay, so this will be the last video for chapters 1 through 4, and um, the this portion here is the chapter 4 serial problem. And if we go down to the very bottom here, you'll see that there are only a couple of things that we need to do. We need to record and post the necessary closing entries and prepare a post-closing trial balance as of December the 31st of 2019. Post-closing trial balance totals 85,110. Okay, so what in the world are these closing entries? And let me just pop you right back over to, whoops, right back over to the 10 column worksheet, only now it's actually 12 columns. And I'm hiding all of those initial columns over here simply because we don't need them. And so probably I would just fix this so that it's now a 12 column worksheet. And we've added a couple of new columns. And those two new columns have to do with the post closing balance sheet that they're asking us for. And so what we're going to be doing is we're going to be closing all of the temporary accounts. And temporary accounts are those that exactly what they say. They are accounts that are um, at the end of every period, we will close out and then we'll start anew. And so if you think about it, if I want to keep track of my insurance expense for every year so that I can see the trends in insurance expense, what I need to be able to do is start every year fresh. And I also start, by the way, every month fresh, so that I can. In most companies, we're going to close the books every month, and so that's what we're going to do today. Now, the way that we close the books is we're only going to look at a certain number of accounts, and they are from this one, that is the withdrawal account, down. So said another way, everything from here, the capital account and up, does not get closed. Those accounts do not get closed. And the only thing that's really going to change in this group, by the way, will be this capital account. Everything else is going to stay the same. It'll transfer right on over here. And so, the first thing I'll do, I guess, is just go ahead and do that right now. So this is going to be equal to this guy. And so I can pull these down. And this one will be equal to this one. And this one is going to be equal to this one. And then we can pull the rest of these down as well. And I'm leaving this one blank. Okay, I'm leaving this one blank because that's going to be reflective of your new capital account. And we've already done all the work for this, by the way. When you go back over to, or down, I should say, to where we did, oh, I hid them. You can't see them anymore, but because I hid them so that we could see them all on the screen. But remember, we have all of these income statements and balance sheets and all of that sort of thing. And so the income statement, essentially, that is from here on down, those disappear. They're going to be zeroed out, okay? And the same thing is true for this one. All right, so let's go and add a new worksheet column. Actually, let's see if I've got, let me come over here so I can just copy this one. And so I'm just going to highlight this whole area here and go Control C so that I can just copy it. And I'm going to have a new thing over here. And we're going to call these closing entries after we paste it. So now what I'm going to do is to get rid of all of this stuff here and put my closing entries in here. And so I'm going to name those closing entries. All right, so closing entries always take the same format. We're going to have four entries that we make to close. The first one is to close the revenue account. And we'll do them in this order, by the way, every single time. And so the first one is to close a revenue account. Now, the revenue account, if I come back over here to my December trial balance, the revenue account is sitting here with $31,284 in it. Okay. And so what I need to do is I need to make it go away. I need to make it disappear and turn into zero. So the way I'm going to do that is to, and I probably should rename this closing entry so that I don't lose track of anything. Let me give it a different tab color here, and we haven't used that one for a while. And we're going to call it rename closing entries. Okay, so the first closing entry then is going to be to close a revenue account. And in this case, it was computer services revenue. And what was it, 31,284? Um, Let me just make sure of that because I don't trust myself anymore. 31,284. Okay. And we're going to close it to an account that we haven't had before. And that account is going to be um, is going to be the income summary account. Now, income summary is simply a holding account. We're going to disappear it as well because it's also a temporary account. Temporary meaning that it closes. Permanent accounts, and those are the accounts of the balance sheet, they never close. But the income statement accounts always close, plus the withdrawal account closes. And you'll see how that works here in a minute. Now, the second thing we're going to do is we're going to close all of the expense accounts. Now, expense accounts are normal debits. So if I want to close them out, I have to have a credit to each one of those accounts. So what I'm going to do is I'm going to go back over and I'm going to pick up all of these accounts from that particular worksheet. But the first thing I have to do is I have to put an income summary because income summary will take the place, just as it did of the revenue, it's going to take the place of all of the expense accounts. So let me go get the expense accounts. This is equal to, and come back over here to this one and find the first expense account, which is this one, and hit enter. And now all I'm going to do is I'm just going to drag this thing down to get all of the other expense accounts. And I think there's another one or two, maybe, maybe a couple. There we go. And then I'm going to close them by putting a credit to them because they're all normal debits now. And if you go back over here, you can see that these are all in the debit column. Okay, and this is the income statement. So here's your first one. So what I want to do is I want to go back and I want to pick up those numbers, but this time I need to pick them up as credits. So it's going to be equal to, I'm going to go back over here and pick it up. And again, I'm just showing you this so that if you decide that you want to use Excel, which is a really, really good idea if you're going to be a business person, um, because you can see how easy it is to get to this stuff. Okay. You're going to just go and pick each one of these up, and you can do it individually, or you can pick it up just like I did. Actually, I think you can probably just double click after the 400, and it would pick that up for you. Anyway, now what we're going to look at is a total of, or the sum of, all of these guys here from 400 on, and 16,824 is the amount. All right, so now I've closed out my revenue. So the balance in revenue now is zero. And I've closed out all of the expense accounts. Now what I need to do is close out the income summary account directly into my capital account. Okay, and the way that that's going to be done, if you were to take a look, and I'll just pop one over here very quickly. Um, I'm going to do this as a um, just as a little T account so that you can see it. This is going to be the income summary account. And so INC income summary. And so the first thing I did was I put a balance over here of 31,284. And that got rid of the services revenue. And now I need to put another entry over here to take care of this debit over here. Or 24. And now my difference is going to be whichever side is larger. In this case, what do I need to get to um, a balance of 0 here? And the answer is I'm just going to take equal this minus this. And so if you'll remember that 14,460, and if I pop back over here, you'll see it, I think. Yeah, there's your 14,460. Okay. And so that's the amount that I need to get rid of income summary. So I'll come down here and a debit income summary for 14,460. And I'm going to credit S-Ray Capital. And let me just stop this a second. I've got to okay, so I've got the battery plugged in now, and the S-Ray Capital, of course, is going to be the same amount, 14,460. All right, I'm also going to put up here, I'm going to just do a little T account, and I'll just copy this one and put it over here for the capital account. So capital, and of course it would say S-Ray Capital, but remember we started out with 73,000. Okay, and so now what I'm doing is I'm putting another here and delete. I'm going to put another 14,460 in it. That's your income. So that increases capital. However, I've got one more entry, and the final entry is to get rid of the withdrawals because that's a temporary account as well. And what that does is that reduces capital. So here I have now S capital. Of 7,100 because that's the amount. If I come back over here, you see that's the amount of the withdrawal. Okay. And over here, I'm going to have S-Ray withdrawals for 7,100. And what that does is that makes all of those go away. So now if I come over here to capital and put 7,100 in here, and then equal the sum, excuse me. It's raining outside. My allergies are acting up. And 80,360 is the new capital number. And I think you'll remember, well, you may not remember, but if we were to go back and open up all of those balance sheets and all that sort of thing from this, what you'd find is that this is now 83 or 80,360, right? It's going to be this new number. And we actually calculated that. So let's go back over here, and this new number here is going to be, I'm just going to have a credit in here change to 8360. And well, actually, what I'm going to do is I'm going to leave that where it was, because otherwise you won't see this anymore. And just put it over here, the new number, 80,360. And now let's do a total, 85,110 is the new number, and I think that's the number. I hope that's the number. 85,110 that you see right here. Okay, and so that essentially takes care of the closing entries. So again, go back over here. We're going to close the revenue to income summary. We're going to close all of the expense accounts to income summary. That's number two. Then we're going to close the income summary itself to capital. Now, if if we're debiting income summary, then we're crediting capital. Capital goes up on the right-hand side, goes down on the left. So if we were debiting capital here and crediting income summary, that would mean we have a loss. That's not the case in this particular instance. Okay, and then we get rid of, finally, we get rid of the withdrawals. And because those are temporary themselves. And so we come back over here, and this is the post-closing trial balance. And so what you have here is none of these guys right here, none of these is still existent. They're not there anymore. The only thing that's there is all of your assets, all of your liabilities, and your capital. So assets is equal to liabilities plus capital. And this is a reflection. It's taken the place of all of your income, that is your revenue, all of your expenses, and your withdrawals. And so what you're left with is only the new capital number and whatever was existent before that with all of the other assets and liabilities. Okay? So, and that takes care of it. So it's that simple, really. There's nothing more to it to get to your post closing trial balance. Um, and we're done. Okay.